So, Austin, I figured we could just pick up where we left off last time, kind of recap what we went over prior.
I'm following your lead, brother.
Cool.
Yeah, I had a good week. I passed another 100K with my Forex funds yesterday. I was trading NASDAQ and Bitcoin, and they ripped yesterday, so it ended up being really nice for me with like pretty low risk overall. It ended up getting me over the line. So it's funny, like I was doing my daily report card, and like this new daily report card that we're using in the Black Shirt Club is so detailed that it's like even on days or weeks where I make money, I still can look back and be like, well, I got my overall grade this week was like an 84 because of some of the days where I'm still making trading mistakes. Some trades I'm not cutting the losses as fast as I could still, even when you're profitable. Like I made money this week, I did really well, but still small mistakes. So it's super interesting. So I figured that, talking about setting yourself up for success, a lot of that would be around what I do with my journaling and my documentation and my study.
Definitely need to get to that.
Yeah. Hey, trading is a game of adaptive learning.
That's
always learning something new.
That's it, bro. And I got this fucking guy who's in the Black Shirt Club. His name is Colin. He had me fucking dying yesterday in the chat. He's like, Logan, you know how we have the A1 entry and now we've been working on this A2 entry. And I was really showing him what everything on the A2. And he's like, yeah, like, and he's from Hong Kong. So he's this Asian guy. He's like, yeah, fuck the A1. It's fucking dead. A2 long live. I was fucking dying, bro.
That's funny.
But again, adapt or die. He's like, yeah, forget that. Let's do the thing that's working.
Right. And congrats on your new challenge that you just passed. That's awesome.
Thanks, bro. We're stacking it up here. James is like, yeah, bro. Next thing, a million, bro. I'm like, yeah, bro. A million next. It's like we got to take some steps to get there, but we on the way.
You're taking the steps. You just got to hold. What was that? 100K or another 200K?
No, it's 100. Yeah, it's 100. Nice. So I'm trying to get the max allocation on one account with my Forex funds.
And that's 300.
Yeah.
Nice.
Yeah.
Cool. Well, that'll come up shortly, I'm sure.
Yeah, definitely.
Cool. We can go ahead and get started, I guess. We have a couple people in here. People are trickling in.
Yeah, let's do it.
Cool. And, I'm really actually happy that you brought up the daily report card and the journaling because that's definitely something that I want to get to. I think we actually found it in the same place. I've been doing a new daily report card. I think Tom shared that interview with Lance Brightstein, and he was going over it. And it's actually been helping out quite a lot,
Yeah.
I find a lot of use out of the journal and the DRCs for sure.
Bro, and it makes the difference. Like
sure.
I posted my thing today that I passed that funding challenge, and like that's going to get a lot of clicks on my page. So I'm going to post it, like because I never flex anything. So if I get to do anything, I'm going to do this. So I put this thing in my inbox, in the caption, and I said like DM me funded if you want something special. And bro, I got 100, 200 DMs already today, and some of the guys that I'm talking to, I'm like. They say to me, I'm making money, but I give it all back and I don't understand why. Like that's super common. And then I ask them, first question I always ask, I say, are you journaling and documenting every trade you take? And all of them say no, but give me this long ass reason why they're not doing it. And I'm like, it's so interesting how predictable humans are. We are all so similar. So when you want to be successful in trading, you can literally almost pinpoint, like, I could give you a list of things that you can pinpoint and say, if everybody's doing that and I just do the opposite, I'm going to probably end up better than them. It's crazy. So I think most people are like, yeah, journaling. They don't even want to hear about it. They turn off the fucking Twitter space or the video because they don't care about journaling. They want a new strategy or a new indicator. And then the people that do care about journaling, they're the ones that end up finally, I think, carving out an edge, because if they journal everything, they track everything, they see their mistakes, they see their good things, and then they start doing the good things that they do well more, and then they stop doing this, mistakes that hurt them as much as possible.
Right.
So, yeah, people just don't want to do the work, bro. That's really what I'm saying.
100%. And, that's something that we actually noticed quite a bit as well. But there was that saying that Lance was saying in this last interview where Tiger Woods always, after every single swing he took, would take a step back and analyze what he did wrong. And it's kind of feedback into what you were saying, how people don't want to do the journaling. It's kind of like you're getting up to swing and you're just randomly swinging. And then you're swinging again without ever taking a step back and thinking about how you did that swing and how you could swing better the next time.
It's kind of, yeah, that's a good example. And I did tweet that too, because I think that is a really good analogy. Think about like Ray Allen, how his 3-point shot is so ugly, like over his head and stuff. It's like nobody corrected him when he was learning how to play to get him shooting proper. You know what I'm saying? And of course it worked out for him. He's like a legend 3-point shooter all time, right? Other than what Curry might beat his record, right? So, or he did beat the record, I mean.
Yeah, he did.
Yeah. Anyway, the point I'm making is like he wasn't corrected early on, so it like developed into this thing that he just had to deal with, and he overcame the handicap, so to speak, of not having proper form. But I think if you go on doing something the wrong way, you build bad habits. So if you're not analyzing it for improvement, like stepping back and analyzing what's wrong with my swing, eventually you're not even able to fix it because your muscle memory is going to be so locked into swinging that way, you're screwed, you know. And then you got to adapt in that frame of mind, or you're just not going to make it. And not many people make it from that point, you know. I think that's why I'm such a big believer in modeling success. Like everybody wants to overcomplicate it. It's like there's so many successful people now with social media. This is the easiest time, I tell everyone, to become a millionaire. There's never been an easier time. You've got everybody and their mother is on social media and sharing their good things. No one shares their fucking losses. Everybody just shares their good things. So if anything, it should be super easy to find the people who have, or at least say that they have what you want, and you should just model what they're doing. And if they're not showing you anything, then don't watch it. You know, if it's just flashing you their success, don't watch it. But like, there's a lot of people like me that document a lot of their journey and share a lot of those trials and tribulations along the way. And that's what I think, you know, can lead to the most accelerated learning. Just
So
model the success.
Yeah, that's an interesting other aspect of setting yourself up for success. You know, we could say having a mentor or a group of people to look up to and model.
Yep. If you try to do it by yourself, you're just an idiot. Like, I'm just being honest. I'm being funny because, you know, we're just talking on Twitter Spaces and it doesn't matter. I would never actually say to someone you're an idiot, but I'm being serious. And like, if you have the ego to think I don't need anyone's help to figure this out when everyone else around me is losing money and calling it a scam, you're a fucking moron. Like, come on, listen to how silly that sounds. You know what I'm saying? You got to go find somebody that's doing well and sit with them and be like, how do I get next to you? Then the problem is people don't want to pay for people's time. People think that, you know, good traders are going to just sit down with them for free. It's like, you get the fuck out of here with that. My time is valuable. Whether I'm trading or I'm coaching somebody, the time is time. That is the most valuable. That's why I'm trading, is to own my time. So when people are like, I want to learn how to trade, but I don't want to spend money on education, it's like, okay, bro, good luck staying at your job, because you're not going to get anywhere trying to figure it out on your own. And you're not going to get anywhere with the attitude of, I'm not paying to get educated. You know what I mean? Like, that's a losing mindset.
Definitely.
Austin, I just wanted to piggyback on that
Please.
journaling aspect. I mentioned this to Logan this morning, but it took me to realize that I can't trade the open. Now, do I think I could have found that out if I didn't look back at my trades? Maybe. Probably would have lost a lot more money. But it's simply just taking a look back at. I was looking at 2022 onward, and in the options world, to be specific.
Mhm.
But after a little bit, January, February, my usual go-to systems were not working. Most of those systems would be deployed, let's say, between open and maybe noontime. And I was kind of in a crux. I was like, okay, I think I'm gonna have to figure something out. And really, it sounds overly simple. I don't want to oversimplify it, but simply moving my trading times from 12 p.m. onward has helped me significantly. And I don't think I would have found that out
Without the
without
journaling.
journaling, without
Yeah.
keeping track of my trades, without seeing, okay, what, you know, from the beginning, why, when I'm entering these things, why I'm entering them. And you know, you see these things piece by piece. You won't uncover the full story of your errors and your successes all in one unveiling, so to speak.
No, that's
But
very true.
you know, but for me in specific, that's you know, one of the factors that has significantly improved my entries. My returns are significantly better as well. You know, I'm taking on far less risk inherently because, you know, the premiums tend to be cheaper less in the day. Farther in the day.
Mhm.
But that's just it's a really interesting thing because I just spoke to Logan about this this morning.
Yeah, I mean, it's all
So
from just tracking and analyzing. So I feel like for me, it's the opposite. I lose money when I stay trading after 12 o'clock. I can clearly see that in my tracking. That's something that's like made a big difference for me as well. Just not adding to my positions after 12 o'clock, just closing and managing trades. So I feel like through the tracking, you really do find, to theme into what we're talking about today, you do find how to set yourself up for success. For example, the way that we do this, so I have this Black Shirt Club. It's a mentorship group. It's 12 weeks long. We give them all of these templates for them to track all of their habits, all of their trades, everything. And when they track their trades in this trade log, they have to put what entry signal they trade and what grade it is, A, B, or C, high quality, high probability, or low quality, low probability, right? We have that and we teach that in our course and stuff. So as people put those trades in, think about the value that they get. They aren't going to remember what they did last Tuesday. They might remember they traded GU, but they won't remember it was a C set up as an A1 entry or a D1 entry or whatever it is. So with the trade tracker, they can go back and look and see in the spreadsheet, all right, and this is super simple. Anybody can make this. We have it and we give it with the people who take the program, but you can take a spreadsheet and say, look, I'm trading at this time. You mark up all the trades. You get the data from the trades. This is my time. This is my entry signal. And this is the probability. And you'll very quickly see I'm trading the A1 entry really, really well. And I'm trading the D1 entry like shit. So I'm going to stop trading the D1 and instantly I'm not going to give back 3% like I did last month. And now I'm going to be up 7% this month overall if I do that. So it's like just looking at that data, you're going to see what you do well and what you don't do well. People think that they're going to remember. You won't. Especially if you're taking more than one trade a day, you will not remember. So you have to put it somewhere where it's tracking over a long period of time. You need a lot of data to make good, decisions from. You can't just have like 10 trades in a data set and be like, yep, this is a system. It's like, no, or this is what I'm doing wrong. It's like, no. You got to see it over months,
Right.
Yeah.
Of course.
Yeah.
And it was funny because I was like, hey, Logan, I use this tool. I forgot what the name is. And I go, Logan, I'm losing 60% of my losses are trades from open to, let's say, 11 a.m. So that's why I've been trading. And he goes, bro, just don't trade, don't trade until 12 p.m.
Right.
I was like, yeah. I was like,
Right.
that's what I'm sticking to. And like all systems, once things, even if things don't work, I'll still stick to them, considering it is part of the system. But these things are always adaptable. Who knows? Maybe a year from now, I'll be back to trading open and morning sessions. But we'll take what we can get with the progress.
Exactly.
Yeah, the interesting thing, and I actually heard this analogy today, was like every trader, we all have our own individual fingerprint, and every trader has their own individual character traits that make them them. And that's why it's so important for all of us really to these results, because Ben is going to trade better at a certain time, and I'm going to trade better at a certain time, just like Austin is. Everybody is a little bit different. So that's why I can't just listen to Austin and say, okay, after 12, I can't trade. You need to test it yourself and then see how you trade after 12.
Right. And track it yourself, track your trades.
Absolutely.
Yeah.
And go ahead.
No, you go ahead.
I was just going to say, Ben brought up using this tool, and this is something that I've been using. I know you guys over at ASFX do prefer to manually enter everything. So outside of a trading log and the DRCs that you guys have you ever looked into automated trade tracking softwares such as TraderView or TradesViz?
Yeah, of course. My FX Book, FX Blue, there's a bunch of them.
Yes. I know you guys use my FX Book. Do you guys use any of the other ones?
I like FX Blue. I think any of them work really, the ones that are not great, like the back end of my Forex funds or FTMO, they just aren't giving you all the details. And again, none of them are doing what I just said, which is classifying it by entry signal and by grade where I can filter. So it's really, I think manual is the best way, because I don't care, like if you are doing trades like how I trade, and Logan, you know how I trade, it's a very specific entry signal. But if you're more discretionary, you don't need to maybe do what I'm doing. But if you're doing like specific entries like me, I want to know, are my A1s winning more than my D1s? What am I doing best? So yeah, I think it's about how precise are you. That kind of determines how precise you have to be in your tracking. For example, I had Anthony Crudelli on my podcast, and it's coming out in 2 weeks. And you'll hear him talk about it, bro. He's so discretionary, it's like mind-blowing. Like, and that's all his experience from trading in the pits in Chicago and stuff. And like, he's so by the feel, it seemed like, compared to me, where I'm like, if it doesn't look like a proper candle formation, I'm not going near it. You know what I'm saying? So it's just very interesting to see how like his discretionary feel doesn't require him to document his trading in the same way that I document my trading.
Sure. It's probably harder to quantify
Yes.
his discretionary style rather than your more mechanical style.
he's got to sit there and write up a whole paragraph about why, or a whole paper about why he liked that play. What was he thinking and feeling in that moment? Me, I'm like, look, in hindsight, I'm going to like this candle formation, so I need to be in this. I'm very systematic, where it's like, if it's there, I need to be in it, you know?
Definitely. Something else that we were talking about last time. Oh, sorry, Ben, were you about to say something? I just saw you on mute.
Oh no, I was gonna say that's an awesome point, because I can relate to that as well. You know,
Yeah.
from when I'm talking about, journaling, I'm almost certain it's not as intense as what you would do. For reference, I'm more of a discretionary trader than I am mechanical.
Exactly. And like with options,
So
especially, I don't even know what the journaling process necessarily would be like for an options trader, because I think a lot of this stuff is very discretionary with options trading, and even any type of time based trading, right? Because a lot of options trades, you're worrying about time, not just price.
right,
Yes,
right.
you'd be surprised. It is rather similar to the way you do it, at least how I do my journaling.
Yeah, you're like Logan. You're the bridge, bro. You're the forex options bridge. Because I'm like dumb illiterate on options, bro. And like I can talk people, in circles about crypto or forex. So it's like you talk to me about a theta, and I'm like, bro, that sounds like a Greek girl's name or something like that. You know what I'm saying?
Oh, that's good.
That's really all it is.
Yeah. What were you gonna say, Logan? You were saying we were talking about something last time.
Yeah. So last time we were discussing, one of the main things that you brought up when you were thinking about setting yourself up for success is having a plan. So, for everybody that wasn't here last time, do you want to just quickly go back into how you view that?
I think you have to just understand, like, markets are always moving. They're made of money, so there's money moving everywhere at all times. So you have to carve out your way of making money in the ever flowing stream of money that is markets. So I have always had a technical bias to be a technical trader and a systematic technical trader more than a fundamental or discretionary trader. So for people like that work with me, they are normally the same thing. They're very systematic people in their life outside of trading, and that translates into what they want to look for in their trading, right? Because your personality has to match your plan. So my experience of who I studied when I first got into trading, like go back way back 2015, 2016, Tim Sykes, Cameron Foose, like these OG penny stock traders, I was learning technical patterns from them. So I always believed in technical analysis. So I built my plan around technical patterns, just in a different market. And then I first built the A1 strategy. So I found a pattern, I back tested it, I proved that that was working in the past. So then I built a plan around trading it at its most profitable time on its most profitable pairs based on the back testing for my plan going forward. So that was what was the A1, and then that developed over time into the D1 and then the D2, and now we're working on the fourth strategy, which is called the A2. Keep the name simple for easy recognition, but they're technical patterns. So my whole trading plan is built around technical price patterns, whether it's in crypto, options, crypto, indices, or forex. That's really what I'm looking at for that. I think it could work at equities too. I just think that they're different because they gap and they move a little bit differently. And I think that if you understand, like even how I'm explaining this, I'm trying to explain it in a way that makes sense, so you can see like the plan. Every detail of the plan has to be there. The times of day, the days of the week. What are you trading? What are your entry signals? How are you managing the trade? And this is stuff that, again, not to plug my Black Shirt Club, but this is like we walk people through building a comprehensive trading plan over these 12 weeks. It's a working document. And then by the end of it, you have this detailed thing that you could take to a prop firm and say, hey, this is my trading plan. This is the results in the past. Here's my back testing. Here's my live trading. Here's my entry. Like, this is my plan. I'd like to come work for you. That's what having a plan means. Not I wake up, I take a shit, I drink coffee, and then I look for the best trade of the day. People tell me that that's their plan. I wish them the best of luck. You have to have this very, I think, methodical. I'm not going to say extremely precise, again, because some people are discretionary. But even the discretionary guys, they're still precise. They're still probably not looking at every fucking market in the world. They're still precise in what they're looking for in some sense of that word. So I think it's like you need a methodical approach. And that's what a trading plan details. Your way of cutting through the fog of all of that, like I said, ever flowing money in the market, because you can't catch all of it. So you've got to just find that edge. And the best example that I can give you is if you have a good trading plan, I really think you're going to catch big rips. Like I had 2 big trades yesterday, but majority of the time, if it's a really good trend trading, especially trading plan, you're going to catch the meat of the move. That's what you want. Majority of it, you don't need all of it. And I think if you build a good plan, you're able to take advantage of moves like that. So, yeah, that's a long-winded answer on what it means to have a plan and how I kind of got to mine.
I personally don't think you could have answered that question any better.
Thanks.
No, I completely agree. So when people are looking at starting to build their plan, you kind of gave some really good ideas. I really like the part where you said, the process of things that you went to when it came to your trading success, and it makes sense as to how you found trading success because of that long list of things. You found a strategy, you built your own strategy, back tested it, found the times that it worked, etc., the markets that worked. If somebody is listening right now and wants to build their own, you gave them some valuable points. Back testing is probably one of the most important things. What else would you tell them for somebody that is brand new looking to build their own trading plan? Let's say they came to you and gave you that answer, that they wake up, take a shit and drink a coffee and look for the best setup. What would you tell them?
You probably just need to figure out and this is going to be tough for that kind of a person, because that person's going to want to look at a chart and find the answer in a chart. But that answer is probably in them reading some trading psychology or just human psychology books and trying to understand themselves more and how they think about money, how they think about markets, in pursuit of finding the answers to basic questions like, am I a day trader, swing trader, scalper, investor? Am I trading, the plethora? Which market am I trading? Am I a technical or fundamental guy? Do I trade news? Do I trade charts? Answering those initial questions would be first thing. Then once you figure out that, I would be like, okay, well, what hours of the day are you allocating to trading? Are you trading before work? Are you full time right now? Then you can figure out what times a day they're trading. That can help make sure they're trading the right asset. Then if you have those hours, I would go back test those specific hours. Like when I did the A1, I knew I was going to be at the desk in the morning, so I back tested from 5 a.m. to 10 a.m. every day. I wanted to know the entries that presented just during that time. I didn't care what happened during the rest of the time, but I was like, if I just do this on one pair, then I could think, okay, if it's an 80% win rate at 1R on these trades, if I risk 10, I make 10 80% of the time. Most likely, if it's doing that in the past, it'll do that in the future. So I'm going to apply that. And then if it's like, okay, that works on Euro USD or Bitcoin, whatever, now let's go test it on the other one. Test it on the other one. And then as you go and test it, you can have confidence to play it. I don't ever play real money into something. I used to, but I don't anymore. I don't play real money into things that are not tested. It could be a great idea. Put it on a demo account. Don't put real money into it. I am a big advocate for not playing trades that are not tested. You might have a hunch, you might have a feeling, you might have insider trading information. I don't care. I try to be super religious with that. It's got to be tested if it's getting real money. Otherwise, we're gambling. We might be right, but in my opinion, that is the line of gambling.
No, you're definitely right. Definitely right. Ben and Cody, I'm curious if you guys have anything else to add on, somebody that's looking to build a plan.
I really liked what you were talking about with the time. I mean, I think for a lot of beginning traders, they're not able to really allocate like a full-time job type of time, I guess, to trading. So a lot of times they are working other jobs. They're, doing whatever it is throughout the day that they have to do. But I think, understanding how much time you can give to it, how much money you can put at it will really help you kind of start to understand the basis of, your strategy and plan. Because if you don't have a huge amount of capital to put towards it, it doesn't mean you can't trade. But especially if you're a beginner and you don't have a ton of capital, I would definitely recommend, kind of throwing that in more of a longer term portfolio until you paper trade enough to get that strategy, like Austin was saying, back tested, and really understand whatever strategy you're going to go for, and make sure that it's worked multiple times. Also, with a smaller account, you got to look at, especially in options. I'm sure it's pretty similar in forex, but when you are risking certain amounts, you got to be able to lose, pretty much that entire amount. So as far as understanding how much money you're putting into a position, as well as if that position is, I guess in forex it would be more leveraged. But in on option, if you're in like a weekly contract, you got to understand that you might be throwing that all away if that contract takes a bad move. So understanding how much of your account to use, if you can lose 10 plays, win 3 and you break even, then you got to know that. You got to have that written down somewhere or put in your head somewhere to where all right, well, if I'm getting near my 12 trades or whatever and I haven't hit one, you're gonna have to find a pretty good setup. And I mean, obviously, either way, if you're gonna enter a trade, it should be a great setup. It should follow all of your rules. But I definitely think it comes down to finding, what kind of time you have, what kind of risk you can take. Um, yeah, I think that's probably the main two I would focus on.
I love those two. Those are two, problems that a lot of traders face: undercapitalization and risk management. Love those.
Austin, I just kind of want to encapsulate what you said, but correct me if I'm wrong. Self-reflection goes a long way. It really does.
Definitely.
And especially in the trading realm, right? You can take these things out. You can take self-reflection in the trading realm or outside the trading realm. You can say, I need to spend more time with friends and family. How do I become more successful at that? Or let's take it over to the trading realm. I need to, like you said, stop giving money back up to the market. And then you can dig a little bit more deeper into those. What are the reasons for that? What is the desire for you to stop giving up money to the market? Well, I want to keep the money that I'm making. All right. Well, how do we do that? So there's different ways to think about this, but I think one theme that I think echoed really well is that you need to be able to look at yourself and be honest. You have to take the good, the bad, the ugly, and see what you can work with. I think that was a good way to encapsulate that.
Thank you. No, yeah, I totally agree. One other thing I could definitely kind of leave you guys with, because I do have a hard stop in 3 minutes. I got another call I got to hop on. I would just say for people who are listening that are trying to just find that groove, that they would look to some of us and say, like, you guys have that groove, I want to be in that. You got to understand the most important thing in trading, not a technical strategy, not a fundamental strategy. It's self-belief. And I think that, like Ben said, the self-reflection, if you do it right, actually increases your self-belief. But you got to feed that self-belief from other sources. And it comes down to, who are you surrounding yourself with? Who are you talking to your trading about with? Who are you working with every day? Who are you reading? Who are you listening to? Like, those things are going to contaminate your mind. It's like, you don't want to poison the well here in your brain. You want to really feed it with good stuff that's going to keep your self-belief as high as possible, because trading is so difficult in so many ways. And again, it's possible. Not everyone's going to get to the point that they want to get to with trading. But I think if you look at the people who have made it, they are blindly confident in themselves that even if they were to blow out, they would come back bigger. And I think if you can really live that life, you will be successful in trading. That's my biggest thing, self-belief. But boys, it was great speaking with you. Let's do this again soon. Maybe a week or two, we'll do another one. I appreciate you having me on.
Thanks
Well
for coming
said,
on,
Austin.
Austin. That was great.
Yeah, no problem,
Thank
guys.
you.
Catch you
Thank
soon.
you very much.